Welcome to the Property Nomads Podcast. We are going to be looking at credit scores today. We are also going to be looking at why they're important, how you can get a good credit score, and how that might help you to buy property. You don't have to be a property investor necessarily to be able to get the content from this episode. You could just be after a better credit score in general, because obviously that can lead to many great things moving forward. I did say to my guest that I would probably butcher an introduction. I think I have butchered that introduction, so apologies. But our guest today is the CEO of PAVE. He is Sho Sugihara. Sho, welcome to the Property Nomads Podcast.
Thanks so much for having me.
We're going to be going through some key things today. We're going to start off with the very basics. What is a credit score? Why do you need a credit score to buy property? What credit score do you need? We're just going to build up slowly but surely. But before we get into that, we're just talking off air. You've got a Japanese heritage, so we'll try not to get into too much about traveling in Japan, because that's a whole different episode. But for those that don't know who you are, if you could give a little bit more of an introduction about yourself, and that would be fantastic.
For sure. It's a pleasure to be here. Thanks again. My name is Sho, so I'm co-founder and CEO of a UK-based financial technology company called PAVE. And my background, so as you said, I grew up in Japan. My mum's English and my dad's Japanese, but until I was 16, I was over there. And my career, I was lucky enough to move around a few countries growing up, but my career has focused on building, I would say, inclusive services. So I started off in the social sector in Japan, working with poverty alleviation there, before going to Brazil and doing what's called microfinance, so helping people who are otherwise invisible to financial systems build a record of credit history, which links to the credit score building that we'll talk about soon, before then going into professional services, where I was a consultant working in financial systems and also a bit of healthcare systems as well. But yeah, I left all of that to start PAVE about just over 4 years ago now. Our mission has been to essentially, as a continuation of my kind of career focus, continue to build products that help include people in a fair way into financial systems.
In terms of that, and that's great, and looking forward to finding out more about that. Just a bit off topic, actually. Do you find that it's very easy for people to go, accidentally fall under the radar because they might not have access to said products? So do you find that's quite common around the world?
Yeah, I certainly. I think by each geography, it varies heavily. So for example, in Brazil, where I first really got involved in this, the system is a bit different. This was actually my university dissertation, and a bit of a tangent, but here we go. I looked at how the Brazilian constitution and labor code associated with the constitution created economic exclusion and financially invisible people, because often the legal requirements for employing someone, for example, required that you have an official residency permit and other things, which a lot of the Brazilian population still don't have, and that can block you out from financial services. So it's a fascinating topic and a very sad one as well. But that's very specific to Brazil. In countries where there are credit scores or credit files provided by the major credit bureaus, which we'll cover as well, I'm sure, it can often be quite different reasons. So for example, if you've never had a credit card until the age of 30, let's say, and for the first time you want to buy a property, the average age of purchasing is around 31, 32 in the UK, then you can be in a bit of trouble because you don't have a history of a credit file. I think another common one I should say that I see is people who migrate from other countries, like let's say Australia or Bangladesh, to the UK. And they don't have any history here at the moment, at least. And that can also lead to some form of exclusion. So the reasons are very geographically, and they vary person to person, but it's certainly something that I think a surprising amount of people, and I think the stat at the moment is about 15 to 20% of the adult population can end up not having sufficient credit history or unexpectedly bad credit history because they didn't realize the ramifications of certain, let's say, missing a payment on a credit card or other things.
Yeah, that's fair enough. Just going back very, very briefly to Brazil, that fascinates me that even Brazilians don't have a residency card. Now, well, the reason I say that is because to me that sounds like something that would be given to you like upon birth or something like that. So the fact that you're saying that even a lot of Brazilians don't have that in their own country, that to me is absolutely mind-boggling. But having been to Brazil, I could well understand why that would be the case, and I don't mean that in a disparaging term or in any way whatsoever. But that to me is absolutely mind-boggling that that's the case.
It's super interesting. I mean, again, it's a bit of a tangent and I could talk forever about it, but it just has to do with how cities were built in Brazil, where a lot of, formerly slave or other individuals ended up living on the peripheries of cities and informally doing that without proper building permits, etc., because they had to. And that kind of perpetuated a certain degree of financial exclusion. When you're not officially registered for things like property ownership or other things, you end up getting excluded from a lot of state-provided formal services. So anyway, I could go on and on, but that's another driver of exclusion in a very specific part of the world.
Come back for episode 2, because that to me,
all right,
absolutely fantastic. So again, there's probably people listening to this saying, Rob, Sho, get on with it. Come on, guys. So let's motor on. So yes, we are mainly focusing this on UK listenership. That's where most of our listeners do listen in from. So for those that might not be aware or might not understand what is a credit score?
Yeah, great and very important question. So a credit score is basically it's a 3-digit number that is kind of a snapshot of how credit worthy you are to a lender. And the more credit worthy you are, the higher that number is. And typically, the more likely, if the number is higher, the more likely you are to be approved for credit. So that's kind of how it works in a very high level. And it means things like, the interest rate offers that you get, the lenders that are willing to lend to you, all these things are going to be better with a higher credit score. And it applies not just to mortgages, but all other aspects of consumer credit. So credit cards and personal loans, car financing. And actually in the future, it's also going to apply to things like buy now, pay later products as well, although currently it often doesn't. There are 3 major credit bureaus in the UK, so Equifax, Experian, and Transunion, and they determine your credit score using slightly different factors, but they're pretty much the same. And these are things like your payment history, so how you've paid credit in the past, your credit utilization, so how much of your available credit you're using, credit history, which is how much data they have on you and how long you've been using credit products, credit mix, which is the kind of, how many different types of credit you have, like a credit card, personal loan, overdraft, etc. And then finally, how recently you've taken out credit. So how much time has passed since you got your last card, let's say. And those things are contributed into slightly different models that the credit bureaus use to figure out where you sit on that particular credit score scale. And to make it a bit confusing, each credit bureau has a different score. So Experian is out of 999, Equifax is out of 1,000, Transunion is out of 710. But they're going to change that. It's going to be 1,000 soon as well. So, adding to the complexity, there's different ratings that these bureaus use. Is that a good enough primer?
It absolutely is. And I'm smiling at the end there because that was a side question that I had written down, is that why would you have, it's okay to have 3 different companies. Well, some people might argue that actually it's not okay to have 3 different companies. It should just be one, but then you then get into a whole different conversation about monopolization of data, etc.
Yeah.
But that was one of my side questions. Even if you've got 3 main companies, you've got 3 different scores. I mean, that's just mind-boggling. and I'm relatively well educated, and I find that mind-boggling as to why that's the case. So I'm glad that that's being changed. Will Experian then make it 1,000 as well, or are they still sticking with 999?
Oh, I'd have to ask them, but I think as far as I know, it's 999. Yeah.
Not like Experian to be different. Personal jab there. Okay, so that's fine. So that makes perfect sense. In terms of them buying a property, is there a particular credit score that you would need to buy a property, or is there a particular rating, or again, is this going to go back to what you've just said, and will it vary on what the mortgage company will look at if they looked at TransUnion, for example, or whatnot? Is there a particular score that you need, or is it based on the rating history and what other factors come into play?
Yeah, it's a great question. One I get a lot actually from friends and family and customers alike. But so unfortunately, there's no easy answer to this one. But what I can say is that as a whole, having a good credit score and having a credit score in the first place does matter if you're going to buy a property and want a mortgage. There's no magic number like 600 or whatnot. But going back to what we covered earlier, the better the number, the better the rates, and higher chances of getting approved that you have. And yeah, cheaper interest rates, of course, that you're going to get. And so what you typically see is that if you have a really low credit, and each of the credit bureaus will give you a rating between, poor or very poor to fair to good to excellent. And depending on where in those gauges you sit with your credit score, the offers will vary quite a bit. And yeah, if you do have bad credit, you're going to get very high interest rates, and some mortgage providers may not even lend to you. As a sort of a bit of a plug, shamelessly from our side, on our website, pavat.com, there is a calculator that we built by actually surveying customers who have an Experian credit score, and with their consent, getting them to apply for various mortgage and other products. And of course, we did that in a way that it didn't harm their credit score. But we have data that kind of gives you a sliding scale sense of, at each credit score, what kind of interest rate are you likely to get on your mortgage. So that makes it a bit more real. In terms of your question on which credit score do mortgage or lenders use, again, it's a bit complex. It varies. Typically, they're going to look at all three of your credit scores. So it's good to have good credit across all three. In some instances, they might not look at all three. They might only look at one or two. And so, let's say you have a really good Experian score, but someone's checking your TransUnion credit score only, which isn't as good. Then you want to make sure that both are, at par and putting forward your best possible financial profile. And so I always recommend for people to build their credit with all three, for sure. And I think the other thing to note here, beyond the credit score is just a kind of summary of your financial picture. And in reality, mortgage lenders aren't going to just look at your credit score. Often they don't really look at that as much as they look at your payment history, whether you have any negative markers on your credit file, like a CCJ, which is a county court judgment that you can get if you don't pay a bill, or IVAs are another one, and bankruptcies, of course, as well. So if you have these types of markers, it's typically very difficult to get a mortgage until that record is cleared from your credit file, which can take up to 6 years. Sorry, I went on a bit there because there's so much to unpack, but hopefully that's useful.
Yeah, we'll definitely unpack as we go along the way, as I'm sure, as you already know, and I'm sure that people are listening are thinking, well, this is incredibly complex. Yes, is the answer. It is a very complex system, I guess. That being said, though, just sticking on the property front specifically, so hypothetically speaking, if I was looking to buy property and, let's just say I'm 20 years old, I've never had a credit card before, how is not having some form of credit card going to impact me? And if I did have a credit card, and let's just say I'm 20 years old, I haven't got a credit card, am I going to be allowed to buy a property or a home? If not, how long would you suggest having some form of credit card before you can apply to purchase a home?
Yeah, that's a great question. And what's really interesting, at least with some of our customers that tend to be quite young, between 20 and 30 years of age, we're seeing more and more people prepare quite far in advance, like years in advance, for getting a mortgage, which goes to my answer to your question. That's the right approach. With something like this, I don't think there's any benefit to preparing as early as possible. I was probably 20, 27, 28 when I first checked my credit score, which I think might be on the early side even, but I would, in hindsight, I think it's never a bad idea to check earlier. And there are many free tools that you can use, which I'm happy to talk about to do so. But my recommendation would be, like, if you're looking to get into the market to get a mortgage and purchase your first property, frankly, you need to be safe at least a few years to build. If you don't have any negative markers like that are going to be on your credit file for 6 years, let's say, if you don't have any of those, it can be shorter, of course. But I think with this stuff, I would err on the side of going early as much as possible.
Sound advice makes a lot of sense. But before we get into sort of the specifics about PAVE, let's keep it very general for the moment. As I said, there's a lot to unbox, as you've said. You've mentioned about things that can have a negative impact on your credit score. And from my experience, some things can impact your score in a negative way that you don't even think about. So, for example, like you mentioned, you might miss a bill, not necessarily you might miss a £2 mobile phone bill, for example, and that can have a severe impact. So are you able to give some more examples of things that people really need to think about when they're trying to nurture that credit score? Yeah,
I mean, there's so many things, and I think there's a broader topic that I'm very passionate about, which is consumers or anyone being made much more aware of what can actually do damage to your credit file earlier, because you typically find out in a post-mortem fashion when you've already done the damage. And that's at least the case for not the majority of our customers, but many, which is painful, right? It feels unfair, especially if you've been sold a credit card at university, not really knowing what the consequences of maxing it out could be. And I've heard that story time and time again. It really does break my heart. I think it's a very sad and unfair introduction to the financial system that many people go through. Anyway, so the major things that can impact it. I'll start by the ones that I'm sure you've kind of heard of before, or many people will have, and then I'll kind of dig through my brain to think of some more interesting cases that I've heard of as well, which will be useful too. The one that has a surprisingly high impact and that can also be adjusted very quickly in your favor is credit utilization. So if you have a credit card with an £1,000 limit and you're using £900, that's a very high utilization. Typically a utilization of anything between 20 to 30%, or higher than that rather, is seen as a high utilization rate. And that can very quickly swing your credit score. I think Experian in the US factor in your credit utilization and put a 25% weighting on it to calculate your credit score. So it is 1/4 of your credit file is determined by that. Another one is any of the negative markers. These do have really big impacts on your credit. So having a CCJ or an IVA will lower your credit score by anywhere between 200 to 300 points. So it's significant. And late payments can do the same. So clearing late payments, if you still can, is a really, really important one. There are other quick wins that you can do, such as making sure you're on the electoral roll. This one is actually a lot. People say it a lot, but don't tell you the ins and outs of how to do it. It's actually quite a complicated process. So if you're like me, and I've always rented, I don't have a house. I live in a house, but I don't own a house rather. And every time I move, I have to make sure that I've registered with my new council to vote. And also, and this is the kicker that a lot of people don't realize, it takes a really long time for me moving to be registered with the credit bureaus. So you either have to download a proof of having registered to vote with your council and PDF file and send it to them, or you have to wait for your bank, once you've updated your bank address details, for the bank to report that data to the credit bureaus. So doing that with all three, especially if you're young and moving a lot, can be a real chore. So I recommend that you do that. That can have a really big impact on your credit file. And of course, as a foundation, you want to know the details. And the best way to check this is there's a lot of free tools out there. So each credit bureau has to provide you a free statutory report with your full credit file details. You can go to their websites. There's other tools that use the same data, but make it much more accessible. So ClearScore, Credit Karma, Totally Money are a few. We also have the same service, although we do charge a fee for it. So if you're just looking at credit file, I'd urge you to go to those firms first if you just want the kind of free checkup. And then, so yeah, I'd say those are the kind of foundations. The things that come to mind that are a bit more surprising, or at least that I was surprised to hear about, I'll give you a couple of examples. So when we look at our own data, we actually noticed that one of the top 3 reasons why someone damages their credit file is because they miss usually a broadband payment. So like, it's something that's really easy to do. You're moving houses, your name was on the shared internet that you were using as a university student with 3 other people. They didn't manage the payments responsibly. You end up taking the hit, right? Because the missed payment's in your name. That's a very common one that I hear. So it's really important. If you manage those payments well, it can contribute to your credit score. So it's a great way to get started. But you have to be careful that the contract isn't being managed by someone else after you've left. Another one that I've heard of, and this one's quite sad, but a lot of some of our customers have been in marriages, and let's say their partner was the joint account holder, or was a guarantor on a loan, or they've taken out money and somehow as a shared agreement with a lender. And then you go through a divorce or something like that, unfortunately, and that stuff often kind of goes off the radar. And before you realize it, your partner's financial behavior has impacted your credit file. And I can't tell you how often we see this, and it feels very unfair. But when you take out joint products together, it can be easier. Sorry, it can happen easier than you think. So I hope that's a good kind of set of examples of things you can do. As you can see, there's multiple. We have a lot more detail on this on our website if you're keen to do a deep dive. But yeah, a lot of this is also a Google away. But those are some of the kind of common and surprising things that I've seen.
All incredibly useful, and there's going to be stuff there, items there that even very experienced people might not be aware of. So absolutely, the electoral roll does make me laugh, of just purely from the point of view of how long it takes. So again, precious point of a piece of advice about gathering all that information ready, and especially if you're in transit quite a lot. My brother had hopefully you won't mind me saying this, where he's now settled down in southwest London, but beforehand it seemed like every 6 or 7 months it was place to place to place, which negatively impacted his score, and he was wondering why that's the case. And even I said to him at the time, it's probably because you're jumping around too often. That might spook lenders, or you're not up to date with electoral rolls. So
yeah,
it is what it is. On the flip side of that then, and so we've just spoken, we just shared examples about things that would negatively impact your score. In order to get a better score, is it just a case of simply avoiding everything that you've just said, i.e. don't miss a payment, etc., 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 or are there other little things that you can do to boost your credit score?
Yeah, I think the quick wins are the ones I mentioned. Definitely lowering credit utilization ahead of an application for something like a mortgage, making sure you're on the electoral roll. And then unfortunately, there's no magic bullet to this stuff. You just have to be disciplined over a long time, typically. So things like making bill payments on time. And if you do take out a credit card or other personal loans, making sure you do pay those on time. I guess, there are case-by-case reasons why, specifically to you, your credit file might be, worse than you think. In some instances, there might be data errors. and those are worth checking for a quick win fixes. And that's why I'd encourage anyone to check their credit file in detail, and all three of them at that. But yeah, I think we've covered the basic ones. I'm afraid there's no kind of magic answer to this. It does take a lot of hard work, and yeah, better get started earlier than later on this stuff.
I couldn't agree more. With that, 100%. So, I mean, we could talk for hours and hours and hours about credit scores. Completely appreciate that we could do that. That time is precious, time is money, as they say. Let's focus on PAVE then. That's why you're on the show as well. So there might be people that are listening to this thinking, well, you've mentioned Experian, you've mentioned Equifax, you've mentioned Transunion, ClearScore, credit card, loads and loads of things. And now we're going to talk about PAVE. So I guess the floor is yours, but what makes PAVE different, and why create it in the first place? Have you seen a gap in the market that you think needs plugging?
Yeah, for sure. I can start with a story of like how it all got started, but before I do, very high level. At PAVE, what we're trying to do is, we're on a mission to improve the credit health of millions of people by making it much easier to build your credit with the world's best credit builder, as we like to shamelessly call ourselves. And we do this by offering a proper path to good credit, and I'll kind of unpack what all of that means. But the way that this actually got started was a gap in the market that we saw. And back in the day, when we were just figuring out what kind of idea to solve for, the best thing to do when you're starting a company is just to talk to potential customers. And so at the time, we thought there was an interesting gap in the market for people that are typically self-employed, who tend to have, tougher time getting access to credit or other services. So I went out with my co-founder to interview as many Deliveroo riders and Uber drivers as I could, but no one wanted to talk to us, of course, because they were like, who are these random guys talking to me in the middle of my shift? Go away. So we ended up riding for Deliveroo because we thought having that green Deliveroo jacket would help us get in front of these people more. I promise this is going somewhere. But anyway, so we did that, and I was milling about Shoreditch near all the restaurants trying to get talking to one of these drivers, and eventually we did. And it was super interesting because they were talking about how, as a migrant, and this guy happened to be Brazilian as well, which was really cool because it kind of went full circle. But he was saying, like, as a migrant, I can't get access to affordable credit because I don't have a credit history, but I really need credit because my income fluctuates as a self-employed individual. And so we had a bit of a aha moment there. And we thought, okay, well, if you're in that situation and you can't get a credit card because you're new to the country, and maybe a credit card isn't even the right product for you because it has quite high interest, what's an alternative? Like, what can we do to make that situation better? And so we started PAVE. And what PAVE does, going to your question of us, how are we unique, is that we don't have a sort of interest fee based model. We have one single subscription fee. And that's really important because we think a lot of customers prefer that transparency. It's not for everyone, of course, and not everyone should be using us either. If you can manage a credit card, fine, go ahead and do that. That's great. But I think we've made a product that is more predictable for people that might have more volatile, let's say, earnings, or just prefer that peace of mind. What it actually does is I bucket them into sort of two things. So you get access to an app. The first thing that we do with your consent is we use a technology called open banking, which lets us see the transactions in your bank account. We can't change them or move money around. We can only read-only access, as it's called. But what we do with that is we will surface all of your recurring bill payments and help you manage those payments on time. And that's important because, as mentioned, actually missing a bill payment is often a really big negative factor on your credit file if you miss a payment. Subject to approval as well, we use that same data to do a sort of affordability check, just to make sure that we're not lending irresponsibly. But we can open a credit line that will help you pay your bills on time. Now, this credit line is interest-free. We don't have any late fees or anything. And what that does is we're helping you pay your bills on time with it, but also we're creating a new record of lending to you, which we then report to the 3 credit bureaus to start making you visible to the system. And this is a kind of world first approach to credit building that we're really proud of. And we think that it's super aligned with a customer's interests, right? Well, by not having interest, it aligns with the interest, so to speak, because we're only lending to you in situations where we think we need to help you to protect your credit score, rather than giving you a credit card that you might overspend on. So a bit of a long example, but that's the first chunk of things we do. The second thing we do is we partner with Transunion, so one of the credit bureaus. We will then take your credit score and credit file data, analyze it, and surface the actions that you should be taking to improve your credit health most efficiently. And we show that in our app, but we also have a team of credit experts who are reachable through WhatsApp and email, who can help you sort of unpack the meaning of this and support you through understanding what each of those actions take. Because there are many free ways you can check your credit file today, but where we think we're different is that actually, even with that data, a lot of the customer feedback that we heard was that, I still don't know what this means, or I don't know where to start, or like, I'm so busy, I don't have time to like educate myself about this, et cetera, et cetera. So we just wanted to make that even easier. And so those are the 2 chunks of things we do. And I think it kind of hints to how we feel we are different, right? Starting with the subscription fee to, building a credit product that aligns with your interests and tries to, be a partner to you rather than something that could trip you up. And then finally, going beyond just pure information sharing to being a source of a kind of education and support backed by not just computers, but real humans as well.
Awesome stuff. Definitely awesome. That's all pretty cool. And the reason I sound really perplexed is I was just trying to create a scenario in my head, going back to one of the first points you mentioned. So I'm going to sort of try and put this scenario to you just to see if I've heard things correctly. So let's just say I'm a delivery driver, and apologies, delivery drivers. Let's just say I'm a delivery driver, and my income fluctuates. So my income fluctuates. I've got, your typical sort of expenses as you would have, fuel, rent, etc., blah, 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 blah. So I've got all of that. And let's just say, because my income fluctuates, that, there might be some times where I will struggle to make ends meet. I might struggle to pay this mobile phone bill or whatever it might be. Have I heard it right that if I'm in that situation and I'm a paid customer, you're going to be able to analyze through the read-only banking, you're going to be able to analyze what's going in and out, be able to make a suggestion. But did I also hear correctly that if I am properly struggling, and I need to find 20 quid to pay that mobile phone bill, you're saying that actually PAVE will step in and help, and that's interest free as well, because you're then protecting my credit score? Just so I've heard that correctly, is that right?
Yeah, no, that's spot on. So just to add a couple of points to that, our first point of call, right, is we want to make sure that if you can afford to pay for something, you should be, right. We don't want to unnecessarily extend loans to you. That's not really how we lose money when we do that, right? And unlike credit cards, which make money often, we want to make sure that we're here as a sort of alert system first and foremost. So you'll be tracking all your bills in our app, and we'll send you push notifications to say, hey, look, we see that you have £300 in your bank account, £400 of bills coming up this week, and so you need to top up. So that's kind of the first point of call. And then yes, subject to approval, and that's really important. We're a fully FCA regulated consumer lender, so we do all the necessary affordability checks, etc., to make sure we're lending responsibly. But if you do pass those criteria, yes, we can top up your account to make sure that you have enough balance to pay for that upcoming bill, and that so you don't go into your overdraft or have to borrow money that might be a lot more expensive.
Oh, that's perfect. So that is awesome. I say that with more volition because I was trying to get that scenario in my head. So effectively, and the whole point of doing that is going back to the mission statement and going back to what you said at the start about that personal belief of, having a healthy credit score, helping people achieve, having a really good credit score. So to me now, I can understand from what you've just said quite clearly how PAVE are completely different from anything else that's out there on the market. Very admirable as well. So yeah, perfect.
I appreciate that. Thanks.
Really, really good. So, you mentioned another point there that you mentioned there as well, is of course whenever you're then, I forget what the Latin is, but when you're the lender of last resort as such, of course you're then losing cash. So I guess if people then, approaching PAVE, approaching yourselves, it's not a case of, we're always going to be there to help, because like you said, you've got to be able to manage your own finances. I guess my point being is, with the educational side of things with PAVE, do you have things where courses or lectures or whatever it might be when you're going through about budget planning? Because budget planning seems to be, to me, something that is quite simple, yet very easy to get wrong at the same time.
Yeah, I mean, it's certainly, I mean, I haven't even cracked it myself, right? Like, despite being a CEO of one of these companies, it's especially difficult. And I think the difficulty is amplified at the moment with cost of living going up so rapidly. So I think, to be honest with you, and this is why we use the tagline, the proper path to good credit, I'm not going to pretend that, well, frankly, any solution in the market is a perfect solution that's going to sort your finances out. It won't. Nothing will, really, unless you get a really expensive financial advisor, which, if you can't afford it, great. I think the main message I want to relay here is, we provide you with the tools as much as we can. So open banking to help you surface your recurring bill payments, keep track of income and expenditure. And then we do have a really, we may say so ourselves, there's something called the credit library on our website, which has loads and loads of bite-sized information on things like what is credit utilization to, what are the main credit bureaus, et cetera, et cetera. So we try and make that information as consumable as possible and accessible. We also do have our own social media channels as well to complement that. And then finally, the credit experts who you can reach out to in the app if you do have additional questions. But what I would say is that, I don't think, anyone really has cracked this in the industry yet. It does end up, if being a kind of two-way relationship. We can do all of this, but ultimately we do need customers and anyone to understand that, without putting effort in, you're not going to be able to build your credit score, and the better to do it early as well, and all these different things. And that's why we think the proper path to good credit is just to, we will be here to supply and support whatever we can, but ultimately we do need consumers also to take the right and healthy actions, and we can't overpromise on what we are able to do. So yeah, hope that answers your question.
Makes sense. It's really a case of help me to help you, help me to help you. It's a two-way street at the end of the day. So completely with you. Sho, is there anything else that you want to add? Any other words of wisdom? I'm just looking through the questions again. We've covered everything that I had written down, but is there anything that you think that hasn't been mentioned yet that needs to be spoken about?
Yeah, I think just one thing comes to mind, if anyone out there is thinking about the next year, and to your point on budgeting, we're facing a time where things like broadband bills and energy bills are going to increase in costs. And I think often these things can happen in a way that might be a lot more, a lot faster and a lot more of an increase than you might expect. And so the one thing that, if anyone is thinking about budgeting this year, is just to do it as early as possible and try to gain as much foresight as possible into budgeting. And luckily the energy price increase is happening right before we enter summer, but there is another one most likely coming in October. And I think if anyone is, that's going to be ahead of winter where consumption goes up. So all I can say is, the more people can plan in advance this year to try and reduce, volatility in your spend and income as much as possible, I think the more one can do that, the better. And certainly, we're hoping to help our customers do that as much as we can as well. So yeah, a bit of a topical last thought, but I think this is a big challenge that we're about to face as a society, and I just want to make sure that everyone can weather it as much as possible.
Much appreciated. Completely agree again with that sentiment. A lot going on at the moment. Quite a lot of scary stuff behind the scenes as well. But Sho, thank you very much. If people want to find out more about PAVE, find out more about yourself, how do people find out about that?
Yeah, for sure. So paveapp.com has all of our detail on our app and resources as well. And you can reach me at sho@paveapp.com. That's SHO if you have any questions or anything really. Very happy to get in touch.
Wonderful stuff. And as usual for listeners, we will put that into the show notes so it's easily accessible for you. Wonderful stuff. Any final words of wisdom, Sho, at all?
No, that I think I've imparted as much as I do know about this sector. Complex one indeed, but definitely navigable, if that's a word, with dedication and willingness to learn. So good luck anyone trying to build your credit to get property out there. Hope it goes well. And
building a good credit score in general, in all honesty, just
indeed.
to add that
yes.
to the mix as well. So Sho, superb. Thank you very, very much, and be delighted to have you back on in due course.
Thanks for the opportunity. Really enjoyed it.